Now, April 2nd, this is your daily financial news. Lots of important stuff going on. I apologize for being a few minutes late to this live session. It is my intention to do daily financial news live at 7:30 a.m. 5 days a week. Then I will record Friday and Saturday. I just got done recording my Friday session. And yes, folks, a lot of you have asked, what is my opinion about Trump's indictment? You're going to have to log in and see the March 31st daily financial news, which will go live at March 31st. And I promise you, I will piss off the left and I will piss off the right, because as always, I try to live in the middle where I think most of us are. But again, if that's important to you, that video will be live at 9 a.m. If I piss you off, sorry, wasn't my intention. But let's get into the news. So let's talk about Las Vegas. Folks, you know by now, if you follow this channel, one of our returning guests is Brian Lebo. Brian Lebo and I actually had a guess that I thought the median home price would surprise to the upside. Bad news is I lost that bet. Yes, swing and a miss. But I was off by 1 month. Yes, folks, Las Vegas housing market has surprised to the upside. Now, the data is still trickling in. It may change ever so slightly, but Las Vegas real estate, month on month, went up. Las Vegas real estate, month on month, went up. It went from 415 last month to 422, up 1.7%. Now, again, remember, we are talking median home price. It is the middle. My bet, the reason I made this bet is, again, I believe the housing market is broken. I believe the low-end first-time buyer home is not showing up. Thus, everything that is sold above the median will eventually pull the numbers higher, and that is what happened in Las Vegas, Nevada. Again, we probably need to wait for another day or so. Brian Lebo and I are trying to get scheduled for something next week. So again, it appears at first blush that Las Vegas housing market was up 1.7%, which I think will shock a lot of people. It's just how the median is calculated. Other details that Brian shared with me is it looks like transactions, he calls them sales, were down 33.6%. Yes, folks, the crash in real estate was a transaction crash. We call that here on this channel. Also, inventory. You are hearing lots of people talk about inventory being up from last year. What they are not telling you is last year was a historic low. Historic low. In fact, Las Vegas real estate is up 100%. Active listings from last year are up 100%. But did you know that if you look at 2019, which you and I will both call before the pandemic, it was, we are 50% below 2019. So again, a lot of people will give you data out of context. We won't do that here. We will try to give you the entire picture. So again, Brian, you won the dollar bet, but darn it, I was off by 1 month. 1 month that Las Vegas surprised to the upside. And again, I think you're going to see that in a lot of metrics. So again, I think the Case-Shiller will head down for the next couple of months. But once they get off their butt and report March numbers, which again won't happen until almost June, you're going to see this uptick. So again, it is where we is. Las Vegas looks like it's going to surprise to the upside on the month-on-month level. He didn't give me the year-on-year number. I should have asked. We were doing this via text. He's actually on vacation. But Brian, if you watch this, thanks for the info. Let's talk about the Fed put. You have heard me undoubtedly, and if you follow me on Twitter, you saw that Danielle DiMartino Booth and I were I guess, tweeting back and forth yesterday. We both believe that Jerome Powell's main mission is to kill the Fed put. It has struck me that maybe people don't understand what the Fed put is. Basically, the Fed put was first put in place by Greenspan, then by Bernanke, and all of these others. Basically, what it means and why I want it killed is the 1%, right? The 1%, when they whine and cry, the Fed lowers rate to bail them out of over-leveraged, illiquid positions. That is my opinion. I believe what Jerome Powell said in Jackson Hole, and you can go back and check the receipts. When Jerome Powell, in his 8-minute succinct speech, he was talking to the 1%. He basically said, I am coming for you. You have time to reposition, and if you don't, I am not bailing you out. Folks, you've heard me talk about Barry the billionaire. I think it's Barry Sternlicht. He did not listen. He's already had to bankrupt or file for bankruptcy for his mortgage company. His REIT is no longer paying dividends or distributions, and he is back on CNBC whining. Barry, you are overpositioned. You are an illiquid billionaire. You are going to take haircuts. He told you he was coming for you. You didn't listen. You didn't reposition. You didn't refi your debt. I believe the Fed put is like a trump card where it comes out and the billionaires win. I want the Fed put dead. I want the 99% to win. We must kill the Fed put. We must let capitalism punish bad investments. In order to do this, what is going to happen? I've said this before, but let's talk about it again. How do you know Powell is winning? One, you are going to see multiple, probably dozens of billionaires get on CNBC, get on Twitter, and yell at the Fed. The Fed must cut. The Fed must cut. The Fed must cut. I hope they don't. These billionaires, it's about time they took it in the shorts. The 99% seem to get the short in the last 40 years. Well, time to pay up. So on CNBC, you will see billionaires whining and crying. And yes, Barry may come back and do a PowerPoint presentation. Won't that be entertaining? Also, you are going to hear politicians, specifically the politicians in power, increasingly coming for his head. And then finally, the masses who don't understand will just scream nonsense for nonsense sake. The Fed put should not be there. If you make a bad bet, you should lose. If you were over leveraged, you didn't do interest rate risk, you didn't do these things, you should lose. That's what the system is for. So again, as I have said, I believe Powell is going to become the most hated man in America. Second, the pain that we have felt thus far, Silicon Valley Bank, Signature Bank, all of that, is nothing. Nothing. We have a lot more. And again, it's the 1% that are over-leveraged in illiquid asset we are going to have some spectacular billionaires blow up. We are going to have billionaires who are billionaires on paper, but not liquid. It is going to be, for me, entertaining to watch. I have no idea where it's coming, but it's coming. So that's the Fed put. The housing market, lots of great stuff in the housing market. We've already talked about Las Vegas. Let's get some more data. The spring selling season that was not. Yes, folks, CNBC is watching our channel. They are watching our communication. New listings continue to be down 30%. We are actually down another 1,000 active listings. Yes, folks. The bottom of the market, which traditionally is in late February or early March, is not there. You can follow me on Twitter at One Rental at a Time, and you will hear Logan Monteshima and I tweeting back and forth. I asked him, what would happen if the low for inventory doesn't happen until late April or May? And his simple tweet was historic. Folks, the housing market is broken. I believe it is all distorted. The spring selling season is not coming, and it's not coming next year either. Again, that does not mean there's no work to be done. In fact, it means you should do more work. There are deals out there. The only people that have to sell have to sell. That is your sign to get creative. And again, you can see Lance Lambert, a Fortune editor, and I tweeting back and forth. Lance has put out something over the weekend talking about the housing market being hot and cold. And I said, Lance, they're actually both, right? The first-time home buyer home, hot, screaming hot. The luxury market, ice cold. I believe the general talk track about the housing market is wrong. People are trying to paint today's housing market like last year spring, last year winter. That's the wrong comparison. Spring of 2022, March, record low inventory. We had markets like Seattle average 112% of list price. Not healthy. You can call that market crazy, white hot. December, nothing is moving. No open houses. That is ice cold. What we have today is both. The luxury market, if you want to be Patrick Bet David and write a disrespectful offer, congratulations. Go shop for million and multi-million dollar homes. You too can get a discount. But to talk about disrespectful offers and tell viewers on first-time homes to try that, it's not coming. Lines out the door. Some of you have sent me video of people lining up to see the only affordable home in your market. The first-time home buyer home is white hot. There is never been one housing market, and today, there's not even one housing market in a location. Take the median price in your market, below it, hot. Above it, ice cold. That's generally what's happening. Obviously, if you want to debate 10 or 20% above or below, go ahead. But hopefully you understand my thoughts. So, the Fed this week. We have lots and lots of Fed speak. I think I counted 9 or 10 Fed speakers this week. This is what I expect to hear. 1, we have more work to do. 2, we are not afraid to go higher. 3, yes, I think my general feeling is another quarter point is on the table for next meeting. Yes, we discussed pause. Yes, the banking crisis is under control. The banks are solid, yada, yada, yada. Again, remember, the Fed has 2 tools, and they will yield them both. One is the Open Market Committee, which now is not till May 2nd and 3rd, but the next one is their voice. They want to really create liquidity or drain liquidity. They want to slow the economy down. I think they are winning. I think the banking crisis helps. I think housing rolling over in the summer helps. But again, they will try to scare you this week. The All In podcast. I don't know if you've saw the All In podcast. It's what I listen to when I go on my long run. My long run this weekend, in case anybody wants to know, 15 miles. Yes, I ran 15 miles this weekend, a little bit over 2.5 hours, 15 miles. The last 3 sucked. The first 12, easy. The last 3, terrible. I need to get some new shoes. Yeah, definitely need new running shoes. So again, the All In podcast, what I was most intrigued this week was their discussion on Google. Again, I have no position on Google. But again, the All In podcast was basically saying Google has too many employees. They are there's too many layers of management. This is coming, folks. More layoffs, more efficiencies. Again, what have we talked about for almost a year? Get close to core revenue. Don't get caught on one of these wish projects that are future of the company. They can be cut in a heartbeat. The CFO or the accountants where I played before, they will look at an organization that produces 0 revenue and go, bye-bye. They don't care how strong the engineering or product talent is. This is a time where companies are going to get smaller and more nimble. Recessions, again, how do I say this without annoying folks? Recessions are a good thing. You can think about it as a way to clear out the underbrush of poor use of capital. You can think of it as preventing larger contagions. The fact that we have tried to delay or pretend like they don't exist is a problem. Now, if you're in the lovely state of California, hey Kip, how you doing? Oh, you're gonna $5 for new shoes. Thank you, buddy. Thank you. I appreciate that. That's funny. That's funny. But again, what are we talking about here? Where was I? Oh, yeah, companies. Again, what companies are going to do is they're going to get smaller, more nimble. Recessions, that's where I was. Recessions are natural. They are part of the system. Yes, recessions will hurt some people. They will hurt some companies. That's what they do. But I want you to remember, if you are an adult, which most of you are probably going to live through 3, 4, 5, or 6 recessions. These are not the Great Depression that are once in a generation or once in a century. They happen. Get prepared. But you will be able to buy great deals. Do the work. Pick your thing. If your thing is stocks, great. If your thing is crypto, great. If your thing is real estate, great. I don't care what your thing is. But become ridiculously focused, because you will be able to buy stuff at a discount. You will be able to get terms. You will be able to do these great things. So again, folks, 3 things to talk about. If you are serious about real estate and you don't have my course yet, my course now is $3.99, how to get started 1 rental at a time, and you want to test me out, you want to see what I'm all about, you now can get the 2-hour deep dive session where we go through 5 students' buy boxes and spreadsheets. It's available on my site. Hopefully I'll remember to put it below. But you can listen to that and create your own buy box. Everything I do in 1 rental at a time is anchored on the buy box. Watch it. Again, it's not PowerPoint. It's me interacting with the audience, answering any and all questions. You must watch that. For $47, you can get a taste of what 1 rental at a time is. It's a very inexpensive way to see if we connect. Second, I am increasingly going to give you access to my Rolodex. One of the things I think we have coming up on April 19th, it's a Sunday, are 4 legends of real estate. Now, I call these the ladies of real estate. They're all female. Guys, you need to come too. These ladies are kicking butt. Frankly, if you're a couple, you should both be there. A lot of the real estate gurus are male, like myself, right? It's a male-dominated place. It shouldn't be. You're going to be able to watch these ladies who are making great moves, have built great businesses, and are doing great things. And again, not PowerPoint. You will get to interact with them. The plan currently is Anna Kelly kicks us off. Anna Kelly's been with us for multiple years. In fact, you were with Anna the day she retired. We have video in her playlist. Followed by April Crosley. April Crosley, Lazy Girl REI. She is so awesome. She is in my second book, 15 Conversations with Real Estate Millionaires. Next, we have Alicia Merriman from Huntsville, Alabama. Lots of you have asked me over the years if you had to pick another market, where would you go? And I've always told you Huntsville. And then number 4, you're going to get Casey from Brick by Brick, who is now becoming our Monday featured guest. You won't see a better collection of folks. You're going to get to interact with them. And then the following Sunday, back-to-back Sundays, you are going to get to hear from the top real estate agents that I know. You're going to get to talk about how do you work together. You're going to get, if you're a real estate agent, how do you become an investor? How do you weed out investors, right? Again, the intention, no PowerPoint. You get to interact with them. We're going to kick it off with Beth Traverso at 8 a.m. Then we're going to follow that up with Jason Pritchard. These sessions are for you. They're $47. One is 4 hours. One is 3 hours. Register now. They will sell out. Only 100 people. They're capped. The technology caps it at 100. If I go above 100, it has to be a webinar, which I am not interested in. Register today. I will put the links below. If you go back and look at what would have been Thursday's daily financial news, you can find the links there. It is on Eventbrite. You can look up Michael Zuber on Eventbrite or 1 rental at a time. Register, register, register. I don't want to hear, Michael, I didn't register. I missed it. Is there any more space? There's no more space. The technology won't let me do it. All right, folks, take care. Bye.